Good morning, everybody. Hey, welcome to the last Friday of September as we get ready to look to see how the markets are winding down for this third quarter before we head into the last quarter of 2019. With that, I do want to remind you of a free report that we have that we're offering that I think is vitally important. Social Security. Social Security, folks, most of you out there are going to be looking to Social Security as one of your main income sources in retirement. So there's choices that need to be made, and you need to make sure you make the right choice. So we put together an actual report on Social Security choices that are out there. All you have to do to get your free copy is text the word security to 863-285-3815. That's right. Just text the word security to 863-285-3815. Hey, Dave will be with us in just a moment.
9.7 Light FM. Sam Smith and Ormani there. It's Dancing with a Stranger. 8:42 here. It's 18 before 9. Let's check in on your money. And Friday's always a federal government data dump day. We get all kinds of numbers out of the government, some good, some bad, some as expected. Let's kind of do the rundown here with some help from Phillip Statler, who's at the offices of Statler Financial Services in downtown Sebring. Boy, it's a pile of numbers, Phillip. I think we got it all put together, didn't we?
I think so. It's coming to the end of the quarter, and we're finally getting all the numbers for the last quarter. So we'll have to see how they shake out today.
Absolutely. One of them came out today, the durable goods numbers. We didn't even get a chance to get to that. The durable goods overall numbers were up 0.2% in August. If I read that, that's about what's expected, but the government was saying that defense expenditures increased that artificially, so I'm kind of taking it as backhanded bad news. Fair guess?
It could be because the number I show as a consensus estimate was down 1.1%.
That kind of explains the government saying, yeah, well, all of that defense spending inflated it up, because I'm not really seeing a big bump off of the markets off of that bit of news as well. Consumer information was interesting, the one that affects all of us that we look at in our paychecks. Income, basically what they expected. Was it up? I don't remember the exact number.
Yep, it was up 0.4%, which is actually right in line with what was expected for the month. So good sign there. And then I think I've got what was expected from the spending, but you actually have the number that came out, right?
I got the personal consumption expenditures, PCE. I was saying that's a new measurement since I got out of college, so I had to look up exactly what it was. That was basically flat month to month. That's it's kind of a working measurement of consumer inflation, and flat is good news from a consumer's standpoint. The thing that hit me was, this is weird. Our savings rate went up by like 8% last month. Now, in a consumer-driven economy, that isn't necessarily good news. For all of the public service announcements we run on our AM stations saying, people, we got to learn to save more. If the economy is going to grow, people, we got to burn plastic more. And a big increase in the savings rate kind of, to me, indicates that some of the things we're talking about are coming home to roost, that the economy is actually slowing down a bit, and people are getting nervous.
Well, and that could be that is starting to happen. That is kind of an unusual thing, seeing how we just came off of summer, which is vacation time. So to be saving during the vacation season, it doesn't quite equate, does it?
No, it's one of those. Not only is the size of the increase a surprise to me, but as you say, coming off of a time where we tend to be spending money like drunken sailors during the summer going on vacation, to see a big increase in the savings rate, I don't even know for sure how to respond to that, what that means.
Well, yeah, and you take that and add it to another article I was reading, it gives some concern because one of the articles I was reading says, the folks out there are no better prepared for a recession today than they were in 2008.
Now, that's kind of a scary thought. And once again, we're drawing a pretty coherent picture of an economy that's not shrinking. We're not into recession. We all know that it's going to happen sometime in here. Don't know what's going to trigger it, but we generally are basically continuing a pace at just a slower growth rate than we had. And that's really not a bad thing this far into a bull market and a growth period for the economy.
No, it's not. And some of the numbers, well, a lot of the numbers are starting to really indicate that to be a fact that we are slowing down, and we're at the end of our contraction phase and our expansion phase, and we'll be heading into contraction at some point. We just don't know when that's going to be.
Absolutely. And every Federal Reserve governor that you could ever find would always say the ideal way to go into a recession is what they call a soft landing, because we can grow out of that a lot easier than we can a crash. So if we're heading for a soft landing, worse things have happened, right?
Oh, well, that's true. Yeah, I'd rather land soft than hard like we did before.
Yeah. We do have a few companies out there that are reporting. Do they give us any kind of an indication what's going on?
Well, they're I guess better than expected for the most part. We've got Micron Technology, the chip maker. They came in about 7 cents better than expected. Their revenue beat forecast also. Their projected current quarter earnings came in really below what Wall Street was expecting. As a matter of fact, they said largely below. Um,
Hmm.
so so you can imagine what that means to their stock price this morning, right? It's down 5.5%.
I was going to say they're the top of my big loser list, so I figured something had to drop on a shoe there.
And the other earnings I have is Vail Resorts. Vail, summertime, you don't expect them to make money in the summertime. They're a winter resort. So they lost $2.22 a share, but that was better than expected. They were expected to lose like $2.53. So better than expected there. Revenue came in as estimated. They are said they're seeing some strong season pass sales for this upcoming ski season. I'll get it right there in a second. So they're trading up 2.5% right now.
That's good to hear. I used to be neighbors of mine up there, so I'm always happy to see Vale and Aspen doing well.
Hey, we talked earlier this week about a change in the S&P 500,
Yes.
and there's another one that's coming that they're just now telling us about, or that we're just now seeing published anyway. The Las Vegas Sands is going to become part of the S&P 500 effective October 3rd. They're going to replace a casino operator. I'm sorry, they're going to replace a company called Nectar Therapeutics, which is going to be moving into the S&P 500 mid cap. I mean S&P mid cap 400. So a little bit of switching around effective next week.
That's semi-interesting that a vacation and resort and spendable income company is getting big enough to move into the S&P 500 while all the pundits and talking heads are talking about the economy slowing down. That's kind of an interesting sign in its own right, isn't it?
Well, I think it kind of is. It looks at capital. How much is their worth, and so I guess they finally bridged that gap where they get to become one of the 500 largest companies in the United States.
Understood. I just saw a macro indication to that as well. Setting the table for the morning, it was an off day on Wall Street yesterday, but nothing exactly to create headlines. The Dow was off by a little under 80. NASDAQ was off by about 46 and a half, and the Standard & Poor's was off by 7.25. That puts us down by between a third and a half on the three major indexes yesterday. Not what you want to see, but it wasn't exactly a sell-off either. All of this data coming out and all of these reports, Phillip, 45 minutes before we open this morning. Where are we heading so far today?
So at this point, the indexes are heading up. The other parts are heading down. So we got the Dow up $44 right now. The S&P 500 up 6.5, and the Nasdaq up 10.5. So nobody's up like earth-shattering amounts of money, just barely up. So we
And
got
it takes
gold.
back we gave up yesterday, kind of.
Absolutely, absolutely. Now we've got the gold and silvers moving down significantly this morning. We've got gold down 0.75%, silver down 1.5%, and so we're seeing actually gold's getting close to getting back below $1,500 an ounce.
I
And we
noticed.
got so then we got crude oil continues to move south, which we like. It's down 2.5% to $54.97 a barrel.
Don't wish to wish ill on the oil producers, but I kind of like it when it gets below 55, don't you?
Absolutely. I like it at the gas pump anyway.
Yeah, take that happily. Asian markets, by and large, weren't overly happy with the fact that we had a red day. They all closed with slight losses this morning. Europe, all their markets are generally trading up midway through their day today so far. Phillip, stability and growth, we can't figure out for sure from all the data what's going to go on. Neither can the big money guys on Wall Street. It's just one of those things where good advice is always to get stable with your retirement fund during doubtful times. How do I find you for advice to do that?
So one way to do that, Social Security is going to be, folks, one of their largest income sources as they head into retirement. And there's a lot of different choices that they can make. And so they want to make sure they make the right choice because there's no like do-overs when it comes to selecting your Social Security options. So we've put together a free report on Social Security choices. All they have to do to get that is text security to 863-285-3815. Text security to 863-285-3815 to get a second opinion on your current portfolio. Call us at 382-0037 to schedule your free appointment. And then join us every weekend for a lot of good information on the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And then back here on Monday morning with a look at what happened to our money over the weekend, which is always kind of interesting in an uncontrolled time, isn't it?
Yeah, especially we're ending up that quarter, so it'll be interesting on Monday.
That's true. It'll be the last trading day of the quarter, so a lot of weird stuff could go on. Phillip, thank you so much. You have a marvelous weekend, and we'll see you Monday, all right?
Thanks, Dave. You too.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Have you done